You know, one thing I get a kick out of when I see some of the hater comments that are like, oh, there's nothing new to see here, nothing's happening, everything's still expensive, just complaint after complaint about my content or the housing market or whatever. Well, the funny thing is, it seems like every single week I always have some amazing new updates to share with you guys that are pretty significant. And I have been patiently waiting for Redfin to update their monthly housing market data for January, because up until last week we only had data that went as far as December of 2022, and now finally we have data that reflects the January 2023 housing market, and man, is it a doozy. Take a look at some of this information, guys. So here's the first big thing that's obviously extremely important. Median home prices are continuing to go down, okay? Now, it didn't go down by that much, but the trend is that it's continuing to go down. So it went from 388K in December down to 383K in January. So that's not going up, it's going down, right? So that's the very first important thing. But that's only a small part of the picture, because when we look at what the rest of the market's doing and some other factors here, it really shows where things are probably going to be headed this year. So the home sales also plummeted. So people are just not buying houses, okay, especially in January. And it went down so much that in December of 2022, the number was in the 381,000 range of number of homes sold, and in January it went down to 272,000, guys. So you're talking 110,000 less homes sold just from one month to the next. So that's a pretty significant number. But wait, there's more, just like the infomercials say. The number of new homes that are being listed are also starting to spike, which, as we can see by looking at Redfin's data here, this starts to happen at the beginning of every year. So this is common, right? This is not an anomaly in the market by any means. This is something that happens every year, but everybody's been complaining for the last couple of years, there's no inventory, there's nothing for sale. It's coming, guys. We can see it right here in the charts. So just in January alone, there was 370,000 new listings hit the market for the entire US housing market. I mean, that is a huge number, guys. Another thing that's changing very rapidly right now is days on market, okay? Days on market for existing homes for sale right now are basically at pre-pandemic levels. We haven't seen homes sit on the market this long since February of 2020. So we're talking a 3-year high of days on the market. So if you don't think that's important or a significant factor in the market, you're kidding yourself, all right? Pre-pandemic levels were 56 days on the market. Right now it's up to 51. So it's catching up very quickly right now. Big surprise, we have another flip on our hands here. They bought this home back in the middle of June of 2020 for $780,000, and they listed it for sale back on November of 2022 for $1,750,000. Property's been on the market for 90 days. They cut the price $100K already, and they basically did nothing to this place. It says right here in the listing, home has updates but needs work. So this isn't even a flip. This is just somebody buying a house, hanging on to it, and then trying to triple the price, basically for doing nothing. And speaking of pre-pandemic numbers, how about this one? This one's an extremely important number that affects the entire market as well, okay? Inventory. We are now officially, according to Redfin's data here, back to pre-pandemic levels of housing inventory, guys. This is something that we haven't seen in 3 years, okay? In February of 2020, we had a 3-month supply of homes for sale throughout the US housing market, and as of right now, as of January of 2023, we are back to that amount. That is a big deal, all right? Because that's been the number one thing that's caused home prices to go so high, in combination with the low interest rates. But we don't have either one of these anymore, okay? We don't have low interest rates anymore. We don't have an inventory shortage anymore. This is proof right here. The number of homes with price cuts is actively going up as well. It's up to 18% of homes in January had a price cut. and that's up 10.8% year over year. So you know how the National Association of Realtors likes to look at all these year over year figures? Well, here's one for you. Price cuts are up almost 11% year over year. So how about that one? What about the number of homes selling above asking price? That's falling as well. It's down to 21.2%, and in February of 2020 it was 18.9%. And that's another important thing to note here too, guys. You know, it's not like homes weren't selling above asking price before all this frenzy happened. It does happen in the hottest markets where you have really affordable housing, or you have extremely desirable school districts, stuff like that. You're always going to see that type of inventory have some type of bidding war or a lot of competition, even in normal times, because everybody wants that location, everybody wants that price point, you know what I mean? And once again, the proof is in this data that this is not something that was unique to the pandemic. It's something that happened even before the pandemic. And as you guys can see, I've been working very hard here to wake people up, okay? I don't want people to fall into the trap of buying right now and then having their home value go down 10% within a year, because that's not a good situation to be in. But I realize people are going to buy, and also that's not going to happen everywhere. And I've said this a million times before, but I will say it again in case this is your first time ever watching one of my videos, and that is this. These are all median national home figures, and some people think that it means nothing. Well, in fact, that's not true, because you have some people in the comments that will say, oh, prices are dropping fast where I live, and you know, things are becoming cheaper again, and you're not seeing bidding wars, you're seeing homes sit on the market. And then you have other people that are from the Northeast or the Midwest saying, no, everything's flying off the market within just a few days, still selling at or above asking price, it's still hot here, no crash here, okay? So how can there be both? Well, these numbers and these figures are proof that we are living in two different worlds right now, and this is the median. So this is just in the middle. These numbers are the middle ground of what's happening out there, and overall, you can see, even though you have some markets that are still hot and some that are not, overall, the price trend nationwide, things are coming down, okay? And you're always going to want to look at these trends for your specific neighborhood, your city, your town, your zip code, which is free to do. And I highly recommend that you go and do that to see what's happening in your local market. So in case you are considering buying this year, you know what you're getting yourself into. And this housing slowdown or housing crash, whatever you want to call it, is not just hitting home buyers and home sellers, it's also hitting the big real estate companies like Zillow and Redfin as well. Now, these guys were already in trouble the last couple years because their iBuyer programs were a miserable failure and they lost billions. But it gets worse from there, because both of these companies have been performing layoffs throughout 2022, and even with all the layoffs that they've done and all the budget tightening they tried to do throughout 2022, both of these companies had major financial losses throughout the year. Zillow, they reported a net loss of $101 million in 2022. And that's nothing compared to 2021, because just in 2021, because their iBuyer program was such a failure, they lost $528 million in 2021. Redfin, in 2022, they laid off 13% of the people that worked there, and things are getting worse for them, because in 2022 they had a net loss of $321 million, and that's double their losses that they had in 2022, which were at $110 million. And here's the funny thing about this: Redfin's revenue actually went up 19% year over year in 2022, but at the same time its gross profits are down by 29%, which is significant, guys. And Zillow is just quite the opposite. They saw their total revenues down by 8% in 2022, and their gross profit is down by 12%. So both of these companies are hurting financially right now, and these are two of the biggest real estate websites in existence right now. So if these guys are not doing well, you know, this is just a sign of the times. Like, this completely backs up everything we just talked about in terms of all the stats and figures of where the housing market is at right now and the picture that this paints for the future. And to be honest, guys, I just love to see this, like especially with Zillow. Their revenue for their Premier agent program went down by 20% in 2022, which I find hilarious because, first of all, any real estate agents watching this video right now, you should know better that this Zillow Premier real estate garbage is a total scam, guys. They're taking our leads for our listings and selling them back to us and giving them to multiple agents at a time, trying to make it look all exclusive and like they're helping people out and helping real estate agents do deals. Like, this is the biggest scam ever to me, ever since Zillow came on the scene with the housing market, because these guys are just taking advantage of agents that think they're going to make all this money in real estate and convince them to pay for leads that they can get on their own for free. But Zillow is managing to sell these leads to people that don't know any better or just don't care and are willing to, be resold the same old leads over and over again. As somebody that has never paid Zillow for this because I know it's a scam, it makes me happy to see that they're losing money on this. Even the CEO of Redfin, Glenn Kelman, he said that Redfin is facing a near-death experience right now when they had their shares trading at $3 or $4 a share last fall. And things are so bad for them as a company right now that they're looking at trying to outsource more of their referrals, so when they get somebody to fill out a lead on their website, they might not even give it to a Redfin agent anymore. They might outsource it to another real estate company and try to make money like that. So everybody is hurting in the real estate business right now, and I am fairly certain this trend is going to continue throughout 2023. Now, have any of you ever heard of the BRRRR method when it comes to real estate investing? In case you haven't, it's basically a strategy that stands for buy, rehab, rent, refinance, repeat. And that's what BRRRR stands for. It's B with 4 R's after it. And this has typically been a pretty good strategy for real estate investors that have gone this route. But there was a story today about this investor that recently tried doing this and got in a little bit over their head and lost a lot more than they expected to, rather than turn a profit like you're supposed to. So this guy bought his first property in Memphis, Tennessee in 2019. And he bought it for 52 grand. He was able to double the value of the property within a couple of years after rehabbing the property with only a $10,000 budget. Now, right off the bat, this guy didn't double the value of the property. The market did, okay? Because we were in this anomaly situation where we had this giant run-up in home prices, okay? So I think we all know that much. So it's not like this guy, did $10,000 worth of work on this $52,000 house and magically it doubled because of his $10,000 investment. That couldn't be further from the truth. It's the market conditions that pushed the house double its value, And this is where I just laugh and all this just gets really ridiculously hilarious if you really ask me, because look at this house. This is a totally short-term flip. They bought this place for $2.47 million just in May of last year, and now they're already trying to sell it for $2.875. And the funny thing is, that was when the market was really hot, and the previous owner listed it at $2.8 million, right around the price this guy's asking for it. So he was able to beat down the previous owner to a better price at the height of the market, and somehow now he thinks he's going to get that price while the market is going down. Good luck. But anyhow, he was able to sell this house in Memphis, made some money on it, and he used it to reinvest and buy another property in Pittsburgh. This was in the fall of 2021, and right off the bat he started experiencing some problems that were unforeseen. And this is a great lesson for anybody who's thinking about doing any sort of real estate investing in the future. So the first thing that happened was he had zoning issues with this property. The house was listed as a single family home, but it was actually zoned as a duplex. So this caused him some issues when it came to the rehab. So this guy had to reapply to get this place rezoned as a duplex. That was the first problem that came up. And in order to do that, he had to hire an architect to create drawings of the property and give recommendations to update the property so that it would be in compliance and the certificate of occupancy could be updated. And just doing that costs about $5,000. But the next problem that he faced after that was finished was finding a contractor, because since this basically all happened at the height of the madness, okay, this was in fall of 2021, contractors were in short supply, and he ended up spending $43,000 to hire a contractor because there was a shortage of them, first of all, so they could charge whatever they want. At the same time, there was the supply chain issues and the cost of goods going up. So it was basically a double whammy for him. Not only did he get hit harder with the contractor fees than he anticipated, but also the supplies to rehab the house as well. This guy originally planned to only spend $20,000 rehabbing this property in Pittsburgh, and in the end it cost him $47,000, so more than double than he thought it was going to cost. And when you're an investor and you're trying to do a strategy like this, you know, this is where having savings and having extra cash put away can mean all the difference in how this type of deal is going to work out for you. Because the problems didn't end there. Not only did the project go double over budget, but because of the huge demand for contractors and the supply chain issues, he had to hang on to this property for longer than he anticipated as well. Because the whole idea is you're basically doing a flip here, but you're not selling it, you're renting it out instead. And some people will just flip it. Who use this method, they'll just do the same thing, but instead of rent it out, they'll flip it. But he did get lucky that this place was a duplex, and he was able to just rent out one side while working on the other side, and he only had to lose about $50 to $100 a month with the vacancy of the other unit. So he only had to come out of pocket about $100 a month while the place was being renovated. So that's not too bad. Could have been much worse if it was a single family, for example, and you're losing the entire revenue while the place is vacant. And this guy got lucky as well because he didn't have the money to pay extra for this, you know? He wasn't anticipating the project to be double what he initially calculated, and he ended up needing to take a loan to cover the difference. And so he says there's a few things he would do differently the next time he went and tried to do this BRRRR method. And the first thing is, he said he's going to look for a place closer to home, because this guy's out of New York. He bought a place in Pittsburgh, and that's like a 7-hour drive away. So trying to get there for any unforeseen things or whatever is basically impossible, guys. You're talking a full day's drive, so it's just not practical. And it made it more difficult when trying to rehab this property, because the contractors would call and say, hey, what about X, Y, and Z? And if you're not there to see what exactly is going on, it's hard to give a proper approval or figure out the situation. The other thing that he said he's going to do from now on is he's not going to buy properties anymore that need extensive renovations like this one. He's going to look for places that need more like a light rehab. So yeah, I mean, good luck with that, because the places that need the light rehab, they're still charging a premium for those, and it's very hard to make money as an investor on deals like that today. He said he's also not going to trust the contractor's timeline anymore either, because he's saying, you know, if the contractor tells you it's going to take 3 months to rehab this place, then you better plan on 4 to 6, so basically double. And I've seen that time and time again here in Miami as well. So that always seems to be the case. So really the moral of the story here, if you ask me, is don't try attempting to do this BRRRR method or be a real estate flipper or investor unless you have some deep pockets, guys. You need to have, you know, several months of reserve funds in the bank if you're going to try to attempt something like this. That way you can avoid taking a loan, especially like this guy had to do in times like now. You know, taking a loan can really kill your profit margin on any type of these deals because the interest rates are high. Versus when this guy had to do that back in 2021, rates were still low. So he got lucky on that front, but not everybody's always going to be that lucky. And the next thing is San Francisco. They seem to be doing everything they possibly can to drive people out of town when it comes to landlords. The story we talked about the other day on how they want to tax all the empty units there. And they're also doing the same thing with businesses, because the latest business that announced their departure from San Francisco is the Bird Scooter Company. And They're the company that has all of those electric scooters that you can rent around town. And the problem that they're having with San Francisco is the fines. So these guys get fined every time somebody parks one of these scooters in the wrong place, or they'll even fine people for riding the scooter, you know, on the sidewalk. Okay, they're fining people to ride scooters on the sidewalk in San Francisco, but you know, right down the block, a guy can be naked and taking a crap right in front of your house or a business, and that's okay. All right. So just think about how insane that is for a minute. You know, because of all the remote work that's going on and all the tech layoffs that's happening in the area, downtown San Francisco is becoming a ghost town. Right now, the city has a ton of commercial vacancies in the downtown area, and they're running a $728 million 2-year budget deficit. So how is that even possible? You know, a city like this that collects more taxes than practically anywhere, they're running a budget deficit of almost $1 billion, guys. It's $750 million. That's insanity. These guys are basically broke, and they make more money than everybody else, and they're trying to drive out people. You know, they're driving out businesses that, you know, are there paying their fines and their fees, and they're driving out landlords that, you know, have properties there. They're just trying to get rid of everything, it seems like. And I don't know what's going to be left or what's going to be the future of a city like this. So it's going to be interesting to pay attention to what they're doing over there, because it just seems like one extreme move after another. And I don't think this can go on much longer until, you know, the city of San Francisco is going to be filing for bankruptcy or something extreme like that. And this really goes perfectly in line with the very last thing I want to share with you guys. And this was sent to me by one of my channel members, Nick. He's always sending me all these cool real estate stories. And this kind of coincides with what we just talked about with San Francisco, because we have the rich areas of Florida here completely booming, okay? And these areas have seen so much appreciation in home values in these multi-millionaire neighborhoods, it's not even funny. And the reason why they're seeing this appreciation is because of all the people with all this wealth moving into this area. And a lot of them are coming from high-tax states or these high-tax cities where they're just kind of being pushed out. You know, you have California implementing this millionaire tax. You know, New York State is like the state that has the second highest state income tax besides California. And you just have all these things that are pushing people with money away from these areas and into places where the conditions are more favorable. I don't know if you guys have ever heard this term, but the term goes something like, money goes where it's treated best. And that's why you're seeing this giant boom here in Florida and other places like Arizona and Texas and places like that, because people are tired of getting ripped off. I mean, just look at this chart real quick, guys. This chart shows the percentage of home value change and appreciation in some of the wealthiest neighborhoods in Florida, and almost all of them are in Florida. Only 3 of them are in California, and all 3 are in the Beverly Hills area, and that saw the biggest increase in wealth for home values in these areas. All the rest of them on this list are all in Florida, and these are the areas where home values basically went up the most in the entire country, okay? And these are all extremely wealthy areas of Florida. And the reason for this is simple. There was a guy in this story that came down here from Massachusetts, and he was saying like, oh, you know, I'm saving so much money not paying Massachusetts state income tax that it's paying for my entire house down here in Florida. That is staggering. But obviously, like we've talked about in my prior videos, this is causing massive problems for us down here in Florida as well, especially when it comes to price to income ratios for real estate. You know, locals are not able to afford the housing here in almost any place anymore because of the rapid rising in home prices here. This definitely doesn't come without its consequences. It's definitely having an impact on the state, and where things will go from here, I don't know yet, but I'll be sure to keep you guys updated on it, that's for sure. If you guys enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I post a new video, and if you don't want to wait, check out my next one on the screen right over here, and I'll see you in the next one.